1 billion. That's not dollars. That's not users. That's the number of financial transactions now flowing through AI-powered systems at just one company. Pelican processes over 1 billion transactions with 55% accuracy improvements and 25% cost reductions. And here's what should make you pay attention. By the time most people realize what's happening, the transformation will already be complete. This isn't a prediction. It's happening right now. And it's about to touch every dollar you earn, spend, and save. Let's rewind. For decades, financial infrastructure ran on systems built in the 1970s. COBOL code, batch processing overnight, fraud detection that caught problems days after they happened. Then came the fintechs. Companies like Block, with products like Cash App, promised to modernize payments. Circle brought stablecoins and programmable money. PayU India scaled to 397 million transactions, processing 20 million daily with just 6-second average response times. But now something bigger is shifting. Block just announced a major workforce restructuring, and it's not about cutting costs. It's about pivoting their entire operation toward AI. Their new initiative, Fair Loans, represents a 50-unit investment in AI infrastructure. This isn't evolution, it's revolution. The old guard is rebuilding itself, and startups are being born AI native from day one. Here's where it gets complicated. AI in fintech currently scores 53 on adoption metrics, with only 18% deep integration across the industry. AI in payments sits higher at 60%. That gap tells a story. The technology is ready, the companies are ready, but the system isn't fully converted. Who wins in this transition? The fast movers. Pelican didn't become a billion transaction processor by waiting. They cut costs by 25% while improving accuracy by 55%. That's the kind of competitive advantage that buries slower competitors. Who loses? Traditional banks running legacy systems, companies that treat AI as a buzzword instead of infrastructure, and potentially workers whose jobs get restructured away. Block's announcement wasn't subtle. They're trading human headcount for AI capability. The question isn't whether this transformation happens. It's whether you're positioned on the right side of it. Let me show you something the headlines miss. PayU India's numbers reveal the scale of what's possible. 301 million in throughput, 96% uptime, 17% efficiency gains, 2% fraud reduction. These aren't marginal improvements. They're transformational. Now multiply that across the entire financial system. Circle is pushing stablecoins as programmable money infrastructure. That means AI doesn't just process payments, it can execute complex financial logic in real time. Imagine treasury management that optimizes liquidity second by second. Fraud detection that stops theft before it completes. Compliance systems that adapt to regulations automatically. Regulatory clarity is expected by Q2 2026. That's not someday, that's months away. When those rules lock in, the companies already running AI infrastructure will have an insurmountable head start. The window for catching up is closing fast. What does this mean for you? If you're an investor, watch the AI infrastructure plays. Companies like Circle, Pelican, and the restructured Block aren't just fintech companies anymore. They're building the rails that all money will eventually run on. The ones investing now in AI capability, not just AI marketing, will dominate. If you work in finance, the skills that matter are changing. Understanding AI systems, working alongside automated processes, managing what machines can't. The jobs being restructured at Block are a preview. This is coming to every financial institution. If you're just trying to live your life, your payments are about to get faster, cheaper, and more secure. But your data is also becoming fuel for these AI systems. The trade-off is real. 20% of PayU's daily transactions, that's 20 million per day, are now processed through AI-enhanced systems. Your money already touches these systems. You just didn't know it. But here's what almost nobody's talking about. Only 18% of fintech has deep AI integration. That means 82% is still running on older systems. What happens when the transition accelerates? System failures, integration problems, flash crashes. The more AI controls, the more correlated the failures become. When one AI system breaks, they all might break together. The efficiency gains are real, but the systemic risks are being ignored. Remember that. 1 billion transactions through AI systems at a single company. Regulatory clarity in months. The biggest fintechs restructuring for an AI-first future. This is the quiet revolution reshaping every dollar in the system. The question isn't whether AI transforms financial infrastructure. It's whether you see it happening before it's too late to act. I'm Via News. Stay ahead.